I made more than $30,000 on this one playbook setup, and in this video, I'm going to be doing a complete breakdown. So whether you are a beginner trader, intermediate trader, or advanced trader, this video is going to help you out because the key factor for me taking this trade was the market sentiment. And if you are able to understand the market sentiment, you have hit the jackpot and you will be able to make money from the market. Let's start with the technicals of this stock, and this is the monthly chart of Tesla. That means one candle represents 1 month, and that is going to be key for us to understand the market sentiment on this stock. We can see that in the month of May, we had a push towards the upside on the stock. And in the month of June, then we were not able to break the highs and lows of the prior month. In the month of July, we were again not able to break the highs and lows of the month of June. That means we had 2 inside bars on the monthly chart on this stock. And that's why this stock, in theory, has been consolidating for the past 2 months. And that is the reason I took a step back from the stock, because the intraday price action of Tesla hasn't been good. It's been consolidating for the past 2 months. So the bad thing is that because it's been consolidating for the past 2 months, we have rarely seen any playbook setups on this stock, maybe 1 or 2 days. But the good thing is that because the range is getting really tight, the high and low for the month of July is basically $50, which is too less for this stock. I'm looking for a break of the high of the month of July or the break of the low of the month of July for a push down or for a push towards the upside. Here's the weekly chart, and we can see the same thing on the weekly chart as well, that it's been consolidating and the range is getting tighter and tighter. This is the raw chart in front of you. I have hidden all the indicators and all the technical levels on this chart, but I'm going to show you guys now. So if I add these indicators and the technical analysis, you guys can see that it's been consolidating in this triangle, and these are the levels I was basically watching for a push up or for a push down. Now here's a daily chart with all the levels and the trend lines I was looking on the stock, and we can see that we have these red lines, and these red, why are these in red and all the other lines are in gray? And the answer is because this is the monthly high for the month of July, and the high was 338. And the low of the month of July was 288.77. That's why you need to start with the monthly chart. If you want a really good playbook setup, it needs to align on the monthly, on the weekly, on the daily chart, at least on the daily chart, and then you can go to the hourly chart. But higher the time frame, the better opportunity it is, and the risk to reward is going to be amazing. And I'm going to show you guys my risk to reward on this trade. It's going to be kind of insane. So this trade I took was on 8th of August, but honestly, the plan was set in place on 1st of August because I took this trade towards a downside as well on 1st of August for the break of this trend line, for maybe potentially it can make a new monthly low, because this was the 1st of August, the very first day of a new month of August. So I was actually looking at this trade for a push down or for a push towards the upside. On 1st of August, I took this trade towards the downside. I made $16,000, which I also posted on my Instagram. So if you guys don't follow me on Instagram, the link will be in the description box below. If I don't post on YouTube, I post a lot of good recaps on my Instagram stories and my Instagram reels. But on 1st of August, even though I made $16,000 on this stock towards the downside, the market was holding relatively weak. SPY had a gap down. I'm going to show you guys the chart of SPY first, and then we will jump back to Tesla. We can see that SPY on 1st of August had a gap down, had a push towards the downside. But if you compare this chart to the chart of Tesla, even though Tesla broke down under 300, the selling pressure was not that much. I caught a push down from approximately 307 all the way to 298, which was approximately the low of the day on this stock. 297.82 was the low of the day. I made $16,000, but I could see that at 300, a lot of buyers are interested in buying this stock, and this stock held relatively stronger than the market compared to SPY and QQQ on the same day. And because of this strength on the 1st of August, I was now looking at this trade for a push towards the upside, because we tried to push towards the downside. Even with the weak market, this stock held strong around 300. Buyers were stepping up. So now my game plan is that I'm going to take this trade towards the upside eventually when we break out about 320 or 330 for the break of the prior month high, which was 338. So that was my game plan on this stock. And right around here on 1st of August itself, I actually added Tesla to my long-term investment portfolio as well. Again, that is not the point of this video, but I actually posted about that on my Instagram, so go and follow me there. But now on this day, on Friday, and coincidentally, this was a Friday as well. So last Friday, I made $16,000. This Friday, we actually broke out and pushed towards the upside. So we started with the monthly chart, the weekly chart, the daily chart, and why I took this trade on 8th of August for a push towards the upside. And the game plan was set in place on 1st of August when this stock was holding stronger than the market. So you just have to wait for that opportunity to present itself. But the market sentiment on this stock was that it's unable to break down under 300. So we might actually see a push towards the upside because buyers are interested interested in buying the stock near 300. Now let's talk about the trend lines as well. So we can see that this stock made an all-time high after the elections in December 2024. Since then, we have been holding this trend line. We actually have 3 touches on this trend line. We can see that 1 touch, 2 touch, 3 touch approximately, 4th touch as well. So yeah, it's a very valid trend line, I would say. And then if you look at the past 3 months, because we have been making inside bars for the past 2 months on the monthly chart, we can see that we have another trend line, which is right here, right here, right here. So I have these 3 trend lines, and we actually got rejected from this trend line on Friday itself. So my game plan for the next few days is that eventually if it breaks out above 338 and if it makes a new monthly high, that means it's making a new monthly high after 3 months. We might actually see a further push towards 360 or 370. And also one bonus point is that on the 1 hour chart, the previous day, that was Thursday, 7th of August, we actually closed near the high of that day. So we closed like a small green candle, like a consolidation candle on the daily chart. On the hourly chart, we actually closed strong towards the close of the market. So on this day, I was looking for a break of the prior high for a potential break above 325. And if we get above 325, it might potentially go for the break of 330. Above 330, we have 338, which is the monthly high. I don't expect this stock to go towards 338 in one day. And the answer is because the ATR of this stock, which is the average true range of this stock, is around $13. And this stock opened near 320. If you round it off, 320 plus $13 is around 333. So if I catch a push towards 333 or 335, I'm going to be happy with it. But now this week, the next few days, I'm looking at this stock for a further push towards the upside if we get some momentum and if this stock continues to hold stronger than the market. Now here's a 5-minute chart in front of you guys, and we can see that it broke the prior high of the day right at the market open within the first 1 minute, and that's when I entered my position because the game plan starts from the monthly chart, the weekly chart, the daily chart, the hourly chart, and now I'm executing based on the 5 and the 1 minute chart. That's when I entered, I added to my position, and my first exit was around 333, 334. I took a few scalps, same day expiry. I actually have a live recording of this trade, so I'm going to play that recording now with my live commentary for you guys to understand how I executed this trade in real time. Here's a live recording of this trade, and we can see that we broke above the prior day high right here, the levels that I have marked, 322 point something. I entered my position, 330 calls, next week expiry. So this was a Friday. I took the next week expiry first. I entered 50 contracts at a fill price of 5.22. My stop loss is a breakdown under the prior day close, which is 322.27. And I'm expecting to lose around, I would say, $2,000 on this trade because my fill price is 5.22 and my stop loss is going to be approximately 4.8 based on my experience. Worst case scenario 4.7. So yeah, maximum the risk is $2,000 to around $2,500. And now because this is a monthly and the weekly chart breakout, I'm expecting a good push towards the upside. It's breaking a trend line it's been holding for the past 6-7 months. I don't want to scalp it based on the 1 minute chart. I'm actually going to look for my additions on this trade if we see a pullback to R3. If you guys see this R3, the green line on the 1 minute chart, it's a pivot level, Camarilla pivot. I don't want to discuss these levels in detail in this video, but if you guys want me to make a separate video on these levels, because these levels hold pretty nicely, especially when the market is making new all-time high, especially on stocks like Microsoft and Google, those who are going for all-time highs. NVDA is near all-time high. These levels are very important because near all-time highs, we don't have any other levels. So these pivot levels, Camarilla pivot levels, they help me a lot personally. So if you guys want me to make a separate video on these levels, let me know in the comment section below. So now my plan on this trade was to take the next week expiry contracts off the open because my plan is to hold that trade, the next week expiry contracts, for a bigger push towards the upside, possibly ATR move around 333, 334. And I'm going to scalp the same day expiry contracts because the same day expiry contracts are very volatile. It's difficult to hold those contracts, but the next week expiry I'm more comfortable holding. So now my plan is that if you see a pullback, a good pullback to R3 or R4, I'm going to add to my position same day expiry contracts for a scalp towards the upside. And as expected, we had a really strong close on the 5-minute chart. On the 1 minute chart, we are pulling back to R4. I added the same day expiry contracts to my position. This is the exact game plan I discussed in the Discord community before the market even opened up in our pre-market webinar. I added 50 contracts, same day expiry contracts at a fill price of 1.7, and my stop loss for the whole trade now is approximately 324. I don't want it to come down under R4 first of all and close under 324. So that is my stop loss for the whole trade. And the rest was history. This was just about holding this trade, the next week expiry for a push towards 334, 335 ATR move, and the same day expiry. If I see any sorts of pullback, I'm going to exit the same day expiry because my goal was to scalp the same day expiry move. And you guys can see right before the break of 329, 330, which is a good psychological level, I locked in a bit of my position, the same day expiry. I'm still holding my whole position. That is the next week expiry that I took at the market open at 9:30 a.m. I just skipped the recording by 15 minutes because I don't want to bore you guys. I took my first partial at 9:40 a.m. Now it's 9:55. I had no reason to exit any of my position, the same day expiry or the next week expiry. We got a break above 330, nice momentum push towards the upside. Now this is the first time I'm going to start locking in my next week expiry contracts, because as I told you, my ultimate profit target was around 334. It's around 332. So I don't want to be greedy now. I caught approximately 80% of the move. I held this trade for approximately 25-26 minutes. It's pretty good, and I'm going to start locking in my profits. So my first partial on the next week expiry contracts was at 9.32. That means the premiums moved from 5.2 to 9.32, which is approximately $4 move on the premiums, and my risk was 40 cents on the premiums. And that is the beauty of trading options. My risk was 40 cents and I made $4 a contract. I'm actually going to exit a bit of my position around $10 to $10.5. So the risk to reward on this trade was at least 10 to 1, which is the beauty of trading options. So now this is approximately the ATR move, and you guys will see that the premiums are at around 10.2. This is where I locked in a bit of my position again at a fill price of 10.2, which is approximately $5 move on the premiums. That means, in simple terms, my risk was $40 a contract and the premiums are up $500. But that is the majority of the trade. I'm just going to try locking in my profits if it starts making a new low on the 1 minute chart or the 5 minute chart, because this might be the extreme of the move. We moved the ATR on a Friday. It moved from 321 all the way to 334, 13 points move. The ATR is $13 on this stock. So I'm just going to lock in my profits. But at the end, I'm just going to show you guys my P&L now. So on my first trade itself, the next week expiry contracts and the same day addition, I made approximately $35,000, and then I lost a bit of money. I tried taking it on the pullbacks because I asked myself this question, that am I willing to risk $5,000 more of my profits of the day to potentially make $50,000 for the day? And the answer was yes. So I just played around with $5,000 of my profits, made some, lost some, eventually called it a day with $31,000 in the green. Now, if you guys sticked around until the end of this video, I want to have a heart-to-heart conversation with you guys, because honestly, I feel like I have been inconsistent on YouTube, and that is on purpose, because I feel like 2025 can be the breakout year for my own trading, for being the best trader I can possibly be. It's going to keep on growing, but I'm making this video. It's actually 11th of August. It's after like 2 or 3 days. I was not planning to make this video, but I just recorded this video because I was reviewing my trade this morning. It's a Monday morning for me in Dubai. And I was like, this is a really good trade. I actually won this trade on my YouTube channel, because if I go back, sometimes if I'm not doing too well in trading, I actually go back and watch my videos from 2019 and 2020. The first ever video on this YouTube channel was how I made $90 in 15 minutes. And sometimes when I'm not trading well, I just go back and watch that recording and I'm like, okay, I'm actually doing really well, to now making $30,000. Potentially after 2 or 3 years, I start making $300,000 on the similar setup, or maybe $3 million. There is like no limit to how far you can go. I mean, you can't make $30 million on the same trade because of liquidity issues. But yeah, I just want to be the best trader I can possibly be. And I wanted this video on my YouTube channel because 2 years down the line, I can go back and watch this video myself. So I just want to have a good relationship with social media, that I post when I want to post, not when I have to post. And trading is gonna continue being a priority for me because I just wanted this video on my YouTube channel. That's why I am recording this video and posting this video, not I have to post a video. Because I remember 2 years ago, Jay would have never held his position for like 25 minutes and made like $35,000, which is approximately 100% return on the next week expiry contracts. But I'm improving as a trader. You guys have seen my journey. If you guys watch my videos from 2019, 20, 21, 22, 23, 24 to now like 2025, you guys will see that I'm improving as a trader, and I'm going to continue improving as a trader. And that is the reason I'm going to post content when I want to post content, when I feel like posting content, not when I have to post content, because I never have to post any content. Because the money I'm making from trading, actually day trading for a living, far surpasses than the money I'm making from social media, right? So if you guys like this video and if you guys post a lot of comments, it's going to motivate me to make more videos for you guys. And I'm a lot more consistent on Instagram because it's just easier to do. I just post. Honestly, my Instagram usage is like 30 minutes a day. I don't even use social media a lot. So it's easier for me to post content on Instagram. That's why follow me there if you want to stay updated with how my trading is going. Thank you for watching, and I will see you guys in the next one.